We have Bitcoin attempting to reclaim the key $60,000 level, but in today's show, we're going to analyze things from both the bullish and bearish perspective, and we're going to uncover some of the real underlying risk factors for the crypto market, because if you do have a look over here, you can see there is a lot of people still super bearish. Is it warranted? Should they be bearish? Where's the market going next? We're going to cover this and a whole lot more. Smash the like button, hit the bell notification, and subscribe to the channel. And congratulations if you're still here. Well done. You've lived through some of the worst parts of the crypto cycle, and I think that, well, let's reserve my views for the rest of the show. So we will get straight into the show content, and I wanted to have a look over here. Game of Trades: recessions cause market crashes, not the Fed cutting rates. And you can go through this entire post. A lot of bearish things to be looking at over here. Inverted yield curves. You have other people coming up. Consensus in September is a bearish month, and we will dump to new lows. Some people calling for $30,000 Bitcoin. We have this each time that Bitcoin price tests this particular level, this level being the realized price, which BlackRock's been buying in terms of the ETF. Then basically when they test that average cost basis for the fourth time, usually that shows signs of cracks and you could potentially break through. So a whole lot of bearish things going on in the market following yesterday's sell-off. But if you have a look over here on the hourly and the daily time frame, well, most of the charts, or at least coins over here, are starting to bounce. Weekly, a little bit red, but possible that you might start to reclaim some of those. And the monthly still down quite a lot across the board, right? If you have a look over here, we've down 25%, PIF 25, Bonk 35%, Pepe down 33%. Only a couple of coins that are up, like HNT and Aave, right? Clay also up over here. But for the most part, on the monthly, a lot of the coins are down, and therefore there's still a bearish sentiment within the market. I want to go through the facts and the data, and then I also want to have a look at some things that are quite threatening for the outlook of Bitcoin. I think this could be one of the most important shows that I've ever done at Crypto Banter. So please smash the like button, and then let's get into it. So in terms of looking at the actual facts and the charts over here, the monthly chart is still incredibly bullish, with price holding above those very significant key levels, currently situated right over here at $58,922. That is the level to hold. That is the level to defend for bulls. And if they can close price over there, and more significantly, if they can close price above that $62,000 region, which is the next white line above, that will bode very well for the future continuation of this price. Now, we've been looking at the US election phase, which is coming up very soon. I want to focus a little bit on timing as well, to really pinpoint on one chart the significant zones and why I believe that prices will likely start to rally aggressively into October. That will be the start of the upside move that we're going to see. But again, I will discuss also the major risk factors where if this happens, well, it could be over for crypto as we know it. So stay until the very end for that information. Now, if you look at Bitcoin over here, it is caught within, of course, a bullish pennant. You have your pole coming into the pennant, reaching near the apex. The apex could come into that October time period over here, which I've just outlined is significant, and we'll focus on why when it comes to the timing. As long as Bitcoin holds above the last 2-week candle low, which is $56,000, I would remain very cautiously bullish and optimistic, looking for higher prices and for price to slowly trend up, right? Because on the daily time frame, you're also still seeing consecutive higher lows attempting to be made over here, and you do have a higher high in the making, right? So looking for price to start to push up, and I'll also show you in the short term why you may actually see a short squeeze, right? We'll get to that in a moment. If you look at the volume, the 7-day volume on exchanges is moving towards the upside as well. That's one of the healthy signs that we've been looking for, but we need to see much more sustainable volume increasing like we have in the prior market cycles leading into that bull run phase, right? Now, these are the lines that I wanted to mark off on my chart. I have the 12th of September as a significant date. I have the 27th of September as a significant date. And then I have the date marked between the 1st and the 5th of October. And there's various different reasons why these are such important dates. And I'm going to give a quick overview, and then we'll get into some of the other factors over here. Now, one reason that I have these dates over here is if you look at the return on investment after the cycle bottom, so you consider the market cycle bottom and where things actually start to move and get parabolic. Now, the particular point that I marked off over there is what we've seen in the price cycles. If you measure out from the exact cycle bottom to where things start to mark up pretty aggressively, it's 680 to 685 days. Now, if you correlate that to the current chart, well, that would mark it between the 1st and the 6th of October. That's point number one. Then we can analyze this from another perspective, and we can look at the return on investment after the halving cycle and where do things actually start to get moving following that halving cycle. And the dates that are marked out over here is usually around 160 days. So I can go onto the chart over here. I'm sure you could all agree that, somewhere around here, this 160-day mark, if you look at the lines over there, this is where things start to mark up and get really, really aggressive within the market cycle. For this particular cycle, if we measure from the halving date to that 160-day mark level, well, that lines up for the 27th of September. From a seasonality perspective, the understanding is simple because you can look at the data of Bitcoin over the July, August, and September time period, and it's very, very common that that's where you find your major bottoms. What that means is that in the current price action that we're seeing, this is likely a major bear trap, right? Shaking players out of their long positions and getting them on the short side right before the big major moves are about to take place, right? So that's something that we're having a look at over there. And if we go and expand this chart, well, the yellow line that I have is simply the 6-month corrective phase, right? So from top all the way down to bottom over there, we've put in the usual phase of here, which is 33.01% drawdown. And the weekly drawdowns that we've had, the biggest one came from the top to the bottom over here was 18.46. And the recent one that we had was also double digits, 10%. Now, what we've seen is anytime that we have those double digit drawdowns on a weekly scale, we tend to lead into a pretty big bounce in the opposite direction, which means that if we get that bounce right now and this starts to look like a higher low on the daily time frame, you'd be looking for major continuation and a slow grind. Now, you're going to see that most of the market participants are going to be caught offside within this chop over here, and maybe you will even get another flush towards the downside. But as you move into this timing sector over here, which I think is vitally important between mid-September and mid-October, that 1 month period is probably where you get the final shakeouts and price starts to move aggressively towards the upside into that election phase. So that's the higher time frame plan, and it's pretty interesting when you look at the market sentiment. We know that the YouTube views have dropped significantly. We know that the engagement on Twitter is also down quite a lot. Most of the retail market participants have left the market, and we have the fear and greed all the way down to 29. We've seen extreme fear, right? We've had it as low as even an 11 read not so long ago, which was where we went down to that 53K low. Not only that, but if you go into the Whale Room Discord over here and you go through to the high block capital liquidation levels, you can see that right now, as it currently stands today, we have the majority of participants running short into the market, right? So the delta is negative over there, and that is on both Bitcoin, Solana, Ethereum, as well as the meme coins. We have Pepe, WIF, and NEAR, just to give us a little bit of a broad overview for the various different crypto sectors. Most people are running shorts right now, and that opens up the possibility for a short squeeze, confirming this trap scenario. And in fact, at $65,000, if Bitcoin were to reach that level, you would actually have $6 billion worth of Bitcoin shorts, which will be liquidated and taken out of their positions over there. And look at that heat map over here on the 3-day time frame, unanimous and in agreement with the other data that we've looked at over here, staggered anywhere from about 62.5 all the way up to that $65,000 level. That is liquidity right for the taking. And if you get one spike into there, market makers will be targeting that liquidity. Now, I know yesterday Run also gave a very, very interesting theory and analogy on his show of how the crypto exchanges essentially will seek liquidity, right? They have also targets in terms of volumes and fees that they need to make. And sometimes at least you can only at least guess or speculate that maybe the sell-off that we had yesterday was a manipulation trap set by a lot of these exchanges to grab that liquidity and get people out of their positions in this environment of low volume. And following that, that causes a lot of pain for those market participants. And sometimes shortly after that is where you see the volume increase back towards the upside, like we're seeing over here now, all of a sudden starting to come back into the market. They don't trust the pump, and then they end up getting left behind. So watch for the short squeeze today as price action unfolds. There it is. You can see price respecting that range quarterly level, currently coming in at $58,081, and looking for price to bounce up and hopefully reclaim the mid-range level over here at $62,600. So there it is. We can see for the most part over here, pretty flat when we look at the spot, the futures, the open interest also pretty low, being flushed out of the market over there, and the funding rate over here moving from positive down to negative side in alignment with what we've seen over here. So before we get into the rest of the show and the main points that I want to uncover, I do want to let you know as well, based on some of my top picks, I had a conversation with Blowfin, and I got them to offer you guys this amazing opportunity where you can spin the wheel for coins that I believe are strong coins for the long term. So most notably, we have Sui, Injective, Rune, we have Mantra, and then of course you have just the good luck one if you miss the spin, right? So how do you participate in this? Well, ultimately for the first 100 users who sign up using the link in the description below to Blowfin, you will get a sign-up bonus of $10 as well for every $100 that you put in. It will be given at the end of the campaign, by the way, 12 days, 3 hours left to go, and it's a non-KYC exchange, right? So you don't need any KYC. They got a lot of different cryptos on here, Bybit-like look and feel, and the coins that you can spin for is even up to 1,000 Sui, right? So you get a spin when you join, and then based on your trading volume you can get additional spins. For those of you who want to take advantage of it, use the link in the description below. Now I want to get into some of the risk factors for crypto, right? Now I think a lot of people think that this is clickbait. It's genuinely not clickbait. This would honestly frighten me if something like this were to take place, and we'll get into what it is, right? If you have a look over here, the ETFs and assets under management in terms of Bitcoin and ETH from these various different institutions is, of course, been rising overall, right? So they continue to buy. There's a big but over there. If you look at all the metrics over here, we can look at ETH, everything bullish, right? If you look at the cumulative spot volumes increasing towards the upside, every metric under the hood over here is an up only chart, right? Looking really, really good over there. Massive absorption. We're seeing the same thing over here on the Bitcoin ETFs. Everything looks super, super healthy and good. But there is some problems with that, right? And it's rehypothecation, right? Rehypothecation in cryptocurrency refers to the reuse of assets that are held by a party, usually a financial intermediary like BlackRock, Vanguard, any of these institutions that are holding the crypto and subsequently pledged again as collateral by that intermediary to another institution. This is one of the risk factors when it comes to crypto. And if you look over here, how that would work is just pretend that you have John who doesn't hold a house. He's not taking a loan for a house. Instead, he has crypto, right? He's storing the crypto with Bank A or Institution A. Institution A borrows that through to Bank B, and the collateral is John's Bitcoin. That's one problem, right? Rehypothecation of Bitcoin. The other problem is the fractional reserve banking methodology that these people tend to use, right? The basic fractional reserve banking cycle looks something like this. For those of you who don't understand the way this works, you deposit $1,000 and the bank will essentially be able to keep $100 of that in reserves and loan out another $900, right? That $900 goes to the next person over here, which means at this point in the system, you have $1,900 and the bank only has $100. They then give that $900 to the next person who puts it in the bank. The bank only has to keep $90, which is 10% of that in reserves, and they're able to loan out $810 to the next person. At this point, now the bank has $2,710 in the system with $190 in reserve. Now, if you rinse and repeat that, you can now lend out $810 to the next person who then puts it in the bank, keeping a reserve of $81 in case that person wants their money back. They speculate that only 10% of the people might actually come and request their finances back, and then they can loan out $729 to the next person, whereby now the bank has $3,439 with only $271 in reserve. And they rinse and repeat this pretty much into a continuum that leads on forever. The problem is that this can theoretically be taking place with Bitcoin. This is one of the biggest risk factors when it comes to cryptocurrency, and something that you absolutely have to be careful of. The very easy way that you can be cautious of something like this is to custody your own assets, not your keys, not your coins, right? Not your Bitcoin keys, not your Bitcoin. And the easiest way to do that is just to put it on cold storage. You can, of course, use the link in the description below if you do want to utilize the at least crypto banter promo that they have to get a ledger. Again, you can use Trezor, you can use anything out there. You can even use a paper wallet, which is entirely free, but you just need to be very careful with your coins, right? If you do want to use that link, by the way, they're giving you something like $10 worth of Bitcoin on each of these. Yes, there it is. $10 of free Bitcoin on each of them that you receive, and you're getting a bit of a savings when you use the crypto banter link. Now, the other risk factor, I'm just wanting to go through some of the risk factors, right? So risk factors, rehypothecation of Bitcoin by the institutions. Other risk factor is fractional reserve banking system when it comes to Bitcoin. We don't know whether these guys are actually buying the Bitcoin because they haven't shown their wallet, right? We don't know. And maybe they are for now, but what happens when the Bitcoin supply at least starts to diminish, which it is, and there's not as much Bitcoin to go around and people are holding it and they don't want to sell it? How can we be certain that they're not going to go into a fractional reserve banking model? I think that based on the history of these institutions, it's very possible. Now, the other risk factor is this, right? Right now, one of the reasons that Bitcoin works is because if you look at this website, what the F happened in 1971. You can go through this list. Growth in productivity and hourly compensation over here really started to shift, right? Productivity went up massively, but compensation had an inflection point over here where it just flatlined, right? And if you go through, you can look at various different factors. Income gains widely shared in early post-war decades. You can see over here also a major inflection point. Income growth, major inflection point in 1971. And as you go through the list, there's more and more and more. It even goes as far as the eating, right? Electricity, food, and fruits. There you go. Inflection point, 1971, sudden parabolic rise in the cost of all of these various different things. Let's go through a couple more. Let's see what else we have. Home value change versus income change. Pretty much you have home values going up massively, but what happens to the income? Flat lines over there. So what happened? What happened in 1971? I have covered this probably twice before on this channel. So if you're new over here, you may have never seen this. Feel free to go to this website, scroll through, look at everything over here yourself. World per capita energy consumption, 1971, massively towards the upside over there. What happened is President Nixon broke away from the gold standard where US dollars were ultimately at least backed by real physical gold, right? So they had to keep the gold in reserves. But as you know, the story goes on. They led into fractional reserve banking, and then you had promissory notes backing that gold, doing essentially the same thing with gold. Now, one risk is they do that with Bitcoin. The other risk is that they actually go back to a gold standard. That's actually probably one of Bitcoin's biggest risks. If they go back to a gold standard, what does that mean for Bitcoin? It essentially diminishes the use case of Bitcoin because Bitcoin is scarce, right? The stock to flow model is lower than what you're seeing in gold at the moment. And if gold continues to pump and leads into a parabolic run, well, we'll see it in the charts, right? So it is something to have a look at. I think we always need to take things from both sides. You guys know that I'm super bullish still on the market. But at the end of the day, gold is coming out of an absolutely massive, and we can go on a 3-month time frame, an absolutely massive cup and handle formation, which is breaking towards the upside right now, and it has a measured move all the way up to $2,800, right? $2,800 over there. I think it's something to watch for, and we'll see what the US does going forward. Look, at the end of the day, unlikely that they go back to the gold standard without doing something with Bitcoin, because we know that BlackRock and these institutions are powerful enough to control the governments. So they probably will still maintain at least some sort of a Bitcoin positioning, which means that we would be okay. But food for thought, right? We'll also see it in the DXY, which should find major support and start to pump. This is why it's important to look at this chart. You can see the DXY over here consolidating, of course, in this bottom region over here, and we're looking for the deeper breakdown, which should, of course, lead to this inflection point as well, where you get the up thrust or move. We're currently following the purple trajectory. There it is, the purple trajectory flashing on and off the screen, and we're looking for that continuation over there, which if the DXY does break down, we should see that, right? We're looking as well at ETH BTC in the falling wedge formation coming into major support over here, and it could be good time to start to establish positions, even though ETH BTC might come a little bit lower. I would say in a worse off case scenario, you got about another 12% down, maybe at a push 15% down. That is ETH losing value to Bitcoin. The USD pair over here did find a bottom in the bottom of the range over there, sitting at exactly, to give you the level, $2,132. So Bitcoin dominance also pushing the highs there, waiting for a little bit of a breakdown. And then the rest of the altcoin sector is starting to move. So I think it's definitely high time to pay attention to the market. I think it's high time to stay focused, although it's really, really difficult to, stick within this market when it's choppy and boring. My message, at least to Whale this morning, was don't try and trade a trend trading strategy. What do I mean by that? A trend trading strategy where you're looking for big up thrust moves, strong, powerful trending moves like that when you are caught within a ranging market. If you do that, you're going to get absolutely rinsed. And I actually personally know a lot of professional traders or seasoned traders, I should say, that have attempted to do that. And through this time period in Bitcoin as well as altcoins, they've probably lost around 30% of their entire trading account due to trying to time every single breakout. All you need to do is simply trade the range, buying the range low, selling the range high, and waiting for clearance above or below those extremities to confirm the next directional trend for the market. So that's what we're looking at over there. Of course, we do have Nvidia, which the earnings did come in. The earnings were all better than expectations, but the market came down slightly because at least the trend has been with Nvidia that every single earnings report that comes out, people expect that it's going to be better, but then it comes out even better than the expectation that these guys had. And if it doesn't at least overshoot what their expectations are, then they consider that to be bearish, which is a very weird thing. Currently, this is your Nvidia chart. You are caught between these two range levels, most notably 90, and then on the top side, 135. So watch as price continues to bounce. Maybe, just maybe, you pull back into the mid-range level. I think you can mark that off on your chart. We'll grab that, pull it down to the mid-range. We can say about 112, right? So if Nvidia does come down to about 112, you probably see a little bit of support found over there. And then the next attempt is where you'll see Nvidia break out. Nvidia is important because we know that it holds a massive weighting for the rest of the stock market, right? And then if we have a look over here, the stock market is also still holding up. We said yesterday, just watch that the stock market doesn't start to break below the white line. You can see it came close, started to bounce off of that level. We'll give it a little bit of time. We're still in the long trade, right? But if you do want to, if you took that long trade with us on Prime XBT, feel free to raise your stop loss pretty much to exactly where this white line is, 5556. Again, 5556. That's the level. Put your stop loss over there. If it comes back down below there, stop out, take the profit. For the stock market, that would already have provided, a 4.41% move. Remember, these are highly leveraged trades, which means that is a great trade. You would have made a lot of profit. And then for anyone out there that's looking for exposure to Coinbase, probably another decent opportunity right here in the spot, probably a decent opportunity to load up a little bit more. I do suspect that before the week closes, Coinbase will probably start to attempt to reclaim back above 200, which is above also your 200 weekly moving average, the white line rising towards the upside. It's currently at 190. So that's it from me, folks. Just a quick one. I'll catch you all on the next one. I hope you all have a wonderful day, and cheers for now.